watching the market react to news, it's always kind of wild, right? Like recently, Bluejay Diagnostics, they're a med tech company, and their stock price did some pretty crazy swings after this warrant inducement thing on April 7th. Biospace reported on it, and it really makes you wonder, what's the deal with that?
Yeah, that's exactly the kind of thing we try to unpack here, right?
Right.
So this deep dive, it's all about Bluejay Diagnostics, BJDX, get into the bottom of it.
Okay.
We've got a whole bunch of sources. We've got their own research document, that Biospace announcement we talked about, market analysis from the pros over at Markets and Markets and Grandview Research.
Okay.
Some articles talking about, the whole diagnostics industry, what are the challenges there,
Right.
and even some trends for 2025.
Cool.
So the goal is to boil all this down, give you the key insights you can get up to speed fast on this company and where it fits in.
Yeah, think of us as your, guides through all this info, right? We're here to answer those big questions you'd have if you were really looking at Bluejay, seriously considering them.
Yeah.
So first off, who's running the show?
Right.
Are they good at what they do, and are they looking out for the people who own the company?
Yeah. Are they aligned with shareholders? That's key.
Totally. And how are they using their money effectively?
Right. The capital allocation question.
And what's their financial picture looking like right now, today?
The balance sheet, all that.
Yep. What's the market thinking about them? The vibe?
Market sentiment.
Exactly. And who owns Bluejay? The big players, and what does that tell us?
Right. Ownership structure.
And, of course, got to talk about the risks.
The what ifs, yeah.
The bumps in the road, exactly.
Makes sense.
So by the end, you'll have a much clearer picture of what Bluejay is dealing with.
The landscape, the whole context.
Okay, let's get into it.
All right, so starting with the basics, what is Bluejay Diagnostics? What do they do?
They develop these rapid diagnostic tests, and their platform is called Symphony. That's their thing.
Proprietary, right?
Yeah, and they're really focused on improving patient care, specifically in critical care settings.
That's a big one.
Yeah, and when it comes to sepsis, that's a huge focus for them. Sepsis is no joke.
Serious stuff.
They're working on a test for IL-6. It's a biomarker for sepsis.
Okay.
And they're going for a super quick turnaround, 20 minutes from sample to result.
Wow, that's fast.
And if you want to learn more, their website's www.bluejaydx.com.
Easy enough.
So that's the business in a nutshell, but what about the tech behind it all? The Symphony platform, what's the deal there?
Yeah, tell me about that. That's their core innovation, right?
It is. It's all about rapid biomarker detection, right there with the patient.
Point of care, that's the buzzword these days.
Exactly. They use this combo of what they call interrupted microfluidics. It's precisely controlling tiny amounts of fluids to make the analysis go faster. Plus nanotechnology and good old ELISA. Enzyme-linked immunosorbent assay, tried and true method for detecting stuff.
Yeah, I've heard of that one.
The goal is to get these quantitative results, clinical chemistry results, way faster than traditional lab methods.
Makes sense, especially in critical care. Time is of the essence.
Huge, but it's important to note that right now, Symphony's just for research use. The FDA hasn't evaluated these claims yet.
Right, got to remember that.
And physically, the system's not huge, about a foot wide, a foot deep, a bit taller than that.
Okay.
Weighs about 35 pounds, standard power outlet, comes calibrated from the factory.
Nice.
LCD touchscreen, normal temperature ranges for operation and storage.
Sounds pretty user-friendly.
Yeah, even a built-in printer. And you can add a barcode reader if you want.
So they've thought about the workflow.
Oh, yeah, definitely.
Okay, so we've got the technology. How about the bigger picture? Where does Bluejay fit in the whole diagnostics market?
That's where those market reports come in. Super helpful.
Paint the landscape for us.
So Markets and Markets, they say the global infectious disease diagnostics market was massive in 2023, $21.4 billion.
Wow.
And they think it'll hit $31.5 billion by 2028.
That's a big jump.
It is. That's an 8% annual growth rate.
Not too shabby.
And it's because infectious diseases are, more prevalent, unfortunately.
Right. Makes sense.
Now, Grandview Research, they looked at point-of-care diagnostics specifically.
Okay, the near-patient testing.
Exactly. They said that market was worth $44.24 billion in 2023, and they see it growing 6.1% annually from 2024 to 2030.
That's pretty healthy growth.
It is, driven by things like the aging population, we're all getting older, and the need for quick results. Nobody wants to wait.
Of course not.
And guess what? Infectious disease diagnostics was the biggest part of that point-of-care market in 2023.
Really? So they're in the right space?
It seems like it. Focusing on sepsis, near-patient platform, they're in a good spot, potentially.
That's a good point. So we've got a company, we've got their tech, we've got the market they're in. Now let's talk about the people in charge.
Absolutely. So leading the charge is Neil Day. He's the president, CEO, and a director.
Yeah?
He was also one of the co-founders back in 2015.
Oh, so he's been there from the start.
Yeah, that usually means they're really invested in the company's vision,
Long-term commitment.
Exactly. And before Bluejay, he co-founded a consulting firm, LMBRI. They did medical products launches and marketing.
Okay.
That was back in 2007. For about 8 years, he was involved in getting medical products out there in the US, Japan, and Europe, working with big companies like Toray, Hitachi, not small potatoes.
Impressive.
And he also had roles at Definine's AG. They got bought by AstraZeneca later on, and Empath Inc., focusing on business development and new diagnostic products.
So he's got a solid track record.
Oh, yeah. Plus, he's got advanced degrees in biochemistry and an MBA from Cambridge.
Wow, Cambridge, that's top-notch.
So, yeah, his resume screams experience, that's for sure.
No doubt. And how about the tech side, the chief technology officer?
That's Jason Cook, joined in 2021. He's got a PhD in biomedical engineering from UT Austin.
Another high achiever.
Yeah, before Bluejay, he was the CEO of Nanohybrids, Inc. They did nanotechnology stuff.
Interesting.
Yeah, for about 7 years, he was also a director and chairman there. They focused on the aeronautics, combining diagnostics and therapeutics.
Oh, wow, that's cutting edge.
It is. He's also got experience in bioconjugation, basically linking biomolecules to nanoparticles.
That's getting pretty specific.
Yeah, and he's even been a reviewer for the NIH and scientific journals, so.
So he's been vetting other people's work. That's a good sign.
Yeah, definitely brings a strong technical background to Bluejay. Perfect fit for what they're doing.
Absolutely. And let's not forget the board of directors. They're the ones guiding the strategy, keeping an eye on management.
Oh, yeah, they're essential. And Bluejay's board, they bring a lot of experience from different areas.
That's always good to see. Diversity of thought.
So Douglas C. Wirth, he's been the chairman since 2017, and before that, he was a private investor. But even further back, he spent 19 years at J.P. Morgan Chase. He was CEO of Alternative Investments and CEO of their international private bank.
So finance background, high level.
Yeah, big time. Then there's Fred S. Seidman, joined the board in 2021. He's the chairman of Woodrock & Co., an investment banking firm.
Okay, another finance guy.
Yep. He's also been involved with SPACs, those special purpose acquisition companies. He's chaired and been CEO of some public ones.
Interesting.
And get this, he's the chairman emeritus of the U.S. Holocaust Memorial Council, So
a lot of different hats there. Interesting mix.
Right, then there's Gary Gemignani. He came on board in 2021, too. He's the EVP and CFO of Acacia Pharma Group, Plec.
Right.
And he's got CFO experience at Synergy Pharmaceuticals, Inc. and Biodel, Inc. So deep in the biotech world.
So strong financial and operational expertise makes sense.
Definitely. And then we've got Svetlana Day. She actually co-founded Bluejay with Neil Day. She was also his co-founder at that consulting firm.
Oh, so she's been there since day one.
Yep. Been on the board since 2015. And lastly, there's Donald R. Chase, director since 2017, long history in banking, Merchants Bank and UVO Bank and Trust Company.
So a good balance of expertise there, finance, operations, leadership.
It's a solid mix, for sure.
Okay, so on paper, it seems like a capable group, but one of our big questions was about the management team. Are they honest, capable, and, shareholder-oriented?
Right. Do they have our best interests at heart?
Exactly. Can we tell from their backgrounds, the board appointments?
Well, based on what we see, the skills and experience are definitely there. They've got the chucks to run a med tech company.
Yeah, no question about that.
But the honesty part, the shareholder-first mentality, that's harder to judge,
That comes out over time through their actions.
Right, like how they use the company's money, how transparent they are with investors.
Yeah, walk the walk, not just talk the talk.
Exactly, and that recent warrant inducement transaction, that's interesting.
How so?
Well, they got the money they needed, but it could dilute existing shareholders' ownership.
That's a trade-off.
It is. They have to balance immediate needs with long-term value for the owners. It's tricky.
For sure. So that's something to keep an eye on, how they handle those kinds of decisions.
Absolutely. Actions speak louder than words, right?
Agreed. So let's shift gears. How are they using their money? Where's the capital going?
It seems like they're laser-focused on the Symphony platform and that IL-6 test for sepsis.
Makes sense. That's their bread and butter.
They're putting a lot into R&D, research and development, things like clinical studies. There's the Simon study, for example.
Okay.
And the FDA approval process. That's a whole thing.
Oh, yeah. Can't forget about the FDA.
And they're figuring out how to manufacture everything at scale, the Symphony system and the cartridges.
Yeah, gotta think ahead.
And their R&D expenses, they jumped way up from $1.1 million in 2021 to $5.7 million in 2023.
Wow. That's a big increase.
Shows they're serious about getting their tech through the pipeline.
For sure.
And they're not doing any mergers, acquisitions, share buybacks, or dividends. Not surprising for a company at their stage.
They're still in growth mode.
Exactly. Got to reinvest everything back into the business.
Makes sense.
But here's the thing. They've said publicly they'll probably need at least another $30 million between 2025 and 2027.
Oh, wow. So they're going to need more cash.
Yeah, developing and commercializing medical diagnostics, it's expensive.
It's a long road.
It is. So back to our questions. Are they using this money effectively? Will it pay off for the shareholders?
That's the million-dollar question, literally.
It's hard to say for sure. They're pre-revenue, so no profits yet.
Right. Still early days.
But more R&D, that's absolutely necessary. Got to invest to grow.
Yeah, no shortcuts there.
They're relying on external funding, offerings, warrants. It shows they're using the money for operations and moving their products along.
Okay.
But the real effectiveness, we'll see that later on, depends on the FDA, how well they sell the Symphony platform, and ultimately, if they make money.
Right. The return on investment, that's the bottom line.
Yeah. And needing that extra $30 million, that highlights the constant need for cash and how important it is to manage it well.
You can never be too careful with money, especially in this business.
So true. So let's get into their financials, look at the numbers.
Yeah, let's see what the balance sheet says.
Okay, as of April 4th, 2025, their market cap was pretty small, around $1.96 million.
Okay.
And since they're not profitable yet, their PE ratio, price to earnings, it's not really meaningful, might be negative or even undefined.
Right. You got to wait for those earnings.
They reported zero revenue in 2023, which sounds bad, like a 100% decrease year over year.
Ouch.
But that's because of a one-time sale in 2022 for $249,000, so it's a bit misleading.
Okay, that makes more sense.
And their profit margins, gross, operating, net, all negative in 2023.
That's not unusual for a company at this stage.
Nope, they're spending a ton on R&D, not selling much yet.
Yeah, got to spend money to make money, as they say.
But the good news is their debt-to-equity ratio is really low, somewhere between 0.03 and 0.17, and they actually have more cash than debt.
Okay, that's good. At least they're not drowning in debt.
Exactly. Shows some financial stability in the short term, at least.
Short term being the key phrase there.
Right. Their free cash flow was negative $9.02 million in 2023, meaning they're burning through cash.
Got to watch that burn rate.
And their price-to-book ratio, that's low too, 0.18 to 0.73.
So based on all this, are they profitable with a strong balance sheet?
Not profitable, that's clear. Those negative earnings tell the story.
Right.
But their balance sheet, it looks decent for now, low debt, some cash on hand.
But they'll need more cash soon, right?
Yeah, they've said their current cash will probably only last till around the third quarter of 2025.
So that's something to keep in mind. They'll need to raise more money.
Absolutely. So funding is going to be a key thing for them going forward.
Okay, that's their present situation. But what about their financial stability over a longer period?
Well, over the past 5 to 10 years, they've consistently reported net losses.
Which is normal for a pre-revenue biotech company. We've said that before.
Yeah, it's the nature of the beast.
So nothing out of the ordinary there.
No dividends either. They haven't paid any, and they need to reinvest everything they have to grow.
Typical for this kind of company, got to fuel that growth.
And their debt management seems pretty good, that low debt-to-equity ratio, and they've used money from offerings to pay down debt.
So they're being responsible.
Yeah, their current ratios is really high, 6.05 to 6.6, means they can meet their short-term obligations.
Good to know.
But their working capital, that's been going down, likely because they're spending more than they're making.
Right. Those expenses add up.
And to wrap up this part, are their earnings volatile? And do they have too much debt?
Yeah, let's hit those final questions.
So their earnings, well, losses really, they've been volatile in terms of the actual amount each time.
Okay.
But the bottom line is they're losing money consistently.
Yeah, that's the constant.
And they definitely don't have too much debt. In fact, they've got more cash than debt right now.
That's a good thing. At least they're managing that well.
All right, before we jump into the second half of our deep dive, where we'll look at market sentiment, ownership, all the risks with Bluejay Diagnostics, I want to tell you about something cool.
Go ahead.
Imagine if you could just snap your fingers and get a full report on any stock you're interested in, or a podcast like this one, even a video breaking it all down.
That would be amazing.
Right. And what if you could customize it, based on how much you know about finance, go as deep as you want?
That's a game changer.
Well, that's what StockAnalytics.ai is building, the future of financial intelligence.
I like the sound of that.
You get on-demand analysis, you can ask specific questions about the stock, use a voice-controlled stock screener to find new ideas. You can even analyze your portfolio, see what risks are there.
Wow, that's comprehensive.
And you can even stress test it, see how it holds up.
That's smart.
So if you're ready for the future of finance, head over to StockAnalytics.ai today. Check out the demo.
I'm definitely checking that out.
And they've got a beta waiting list. Early users get 50% off, and there are even opportunities to invest in StockAnalytics.ai itself.
Now that's an interesting opportunity.
So don't wait. Sign up at StockAnalytics.ai.
Will do.
And now, back to Bluejay Diagnostics. Ready for the second half?
Absolutely. Bring it on.
So we've covered the business, the management, the financials. Now let's see what the market's thinking, the sentiment around Bluejay.
Yeah, how are people feeling about them?
It seems pretty volatile, very reactive to news, like those stock price swings after the warrant inducement thing, up and down, crazy.
Yeah, makes you think people are watching them closely, trying to figure them out.
I think so. The market's paying attention to their financial moves and what their future looks like.
Makes sense. High stakes.
And analyst coverage, it's not super widespread. And their price targets, those that exist, they're all over the place.
So no clear consensus.
Some analysts are really bullish, way higher targets than the current price. Others don't even have a target or haven't updated it recently.
That's typical for early-stage biotech. Lots of unknowns.
Exactly. It's all about potential, but also lots of risk.
And what else has been happening, news-wise, besides the warrant thing?
Well, they did a reverse stock split back in November 2024. Companies sometimes do that to bump up the stock price.
Okay.
And to meet listing requirements, stock exchange stuff.
Got to stay listed.
Right. And they closed some public offerings, got more cash, but also more shares outstanding.
Dilution, the double-edged sword.
And in December 2024, they got back in compliance with NASDAQ's minimum bid price rule. That's good news, usually.
So they're actively managing the financials, fighting the good fight.
They are. It's a constant battle for companies at this stage.
So how do these broader market trends we talked about play into this? How does it affect how people see Bluejay?
What are the 2025 trends article? That's really eye-opening.
Fill us in.
Technology is changing everything in diagnostics so fast.
Yeah, it's amazing how quickly things are moving.
AI in digital pathology, that's just going to keep growing. And point-of-care testing, it's all about being faster, smarter.
It makes sense. Get those results quickly.
And AI is a big part of that, making diagnoses more accurate.
That's where the real value is, better diagnoses.
And since Bluejay is all about near-patient rapid results, these trends could really help them.
Yeah, they're riding the wave.
The article also talked about point-of-care testing in remote areas, places without easy access to healthcare.
That's important. Reaching underserved communities.
And Symphony being portable and fast, that fits right in.
It does. That's a real advantage for them.
But there's also this growing awareness of things that can mess up test accuracy at the point of care.
Oh, like what?
Like hemolysis, that's when red blood cells break down, and just avoiding errors in general before the sample even gets analyzed.
Yeah, quality control, super important.
So Bluejay's got to make sure their platform handles all that.
Absolutely. No room for error in diagnostics.
So those are some things to keep in mind when we think about market sentiment.
Okay, that gives us some context. Now let's talk ownership. Who owns Bluejay?
So institutions, they don't own a huge chunk, usually less than 1% to around 7%, depends on the report. The big institutions, they tend to be cautious, especially with pre-revenue biotech.
They want to see some progress before they go all in.
Exactly. But some institutions have been buying more lately, so that's maybe a good sign.
Interesting. Maybe they see something promising.
Insider ownership, though, that's pretty high. Neil Day, the CEO, he's a major shareholder.
Oh, yeah. Skin in the game, always a good sign.
And there have been reports of him and another director buying shares.
That's a vote of confidence.
It usually is. The market sees that as a positive.
And how about overall ownership concentration? Are there a few big players holding most of the company?
Yeah, seems pretty concentrated. One source said the top 15 shareholders own about 75.6%.
Wow, that's a lot.
And the Anson Group, they were mentioned as a major holder.
So a few entities have a lot of sway.
They do, and that can mean lower liquidity for the stock, could make it more volatile.
Makes sense. Fewer shares, changing hands.
But it also means those big shareholders have a lot of influence.
They can really steer the ship.
And what about corporate governance? The rules and structures.
Do they have the usual stuff in place?
They do. They've got a code of ethics all about conduct for employees and directors.
Okay, the ethical guidelines.
And the board has different committees, like the audit committee for financials,
Makes sense.
this compensation committee for executive pay, the nominating and corporate governance committee, all that.
So they've got the standard checks and balances.
And they recently changed the quorum requirement for shareholder meetings. That's another governance thing.
Interesting, trying to make things smoother.
All these mechanisms are there to keep everyone accountable and protect the shareholders.
It's all about transparency and fairness.
Okay, so we've got low institutional ownership, high insider ownership, concentrated ownership, good governance. Now let's get to the risks and opportunities.
Yeah, the SWOT analysis, time for the good and the bad.
Right, strengths, weaknesses, opportunities, threats. Let's break it down.
I like it. Systematic.
So strengths, the Symphony system, that's got to be their biggest asset.
Definitely. That's their core technology.
Rapid near-patient testing, whole blood, that's a big deal in critical care.
Time is critical in those situations.
Plus, they've got that exclusive license and patent protection, gives them an edge in the sepsis diagnostics market.
So they've got some competitive advantage.
They do, but weaknesses, well, they're pre-revenue. That's always a risk.
Yeah. No profits yet. That's the big one.
And they've been losing money, negative cash flow. They need that external funding to keep going.
It's a constant need for capital.
And there's been talk about technical issues with the Symphony cartridges and their working capital's going down, so some financial things to watch.
So some challenges to overcome.
Now for the opportunities, the infectious disease diagnostics market, that's huge and it's growing.
We talked about that. Lots of potential.
And the point of care segment, that's growing even faster, the aging population, more diseases. It all points to more need for testing.
It's a good market to be in if you can make it work.
And point-of-care testing in remote areas, that's a big opportunity for Symphony, portable, fast, perfect fit.
They could really carve out a niche there.
And AI in diagnostics, that's a huge trend, could give Bluejay new ways to develop and stand out.
They could be at the forefront of that. Exciting times.
But threats, gotta talk about those too. Competition, that's a big one.
Yeah, there are some big players in the diagnostics market.
And the FDA getting approval, that's always a question mark.
The regulatory hurdles are real.
And reimbursement policies, if those change, it could hurt them and they'll need more funding. So dilution for shareholders is a risk.
Yeah, those are all valid concerns.
The articles also talked about the challenges of selling medical devices, long sales cycles, lots of stakeholders to deal with, hospitals, doctors, and all the regulations.
In a complex landscape.
And even point-of-care testing, specifically in primary care, there are regulatory and reimbursement uncertainties.
So lots to navigate.
Okay, so we've covered a lot. What's the big picture? What's your conclusion on Bluejay?
Yeah, wrap it up for us.
They're early stage. They've got this potentially game-changing platform targeting a real need, sepsis diagnostics.
Okay.
But financially and regulatory-wise, they've got hurdles to jump, typical for a company at this stage.
Makes sense.
The management team, they seem to know what they're doing, but how they balance funding needs with keeping shareholders happy, that's something to watch.
Actions speak louder than words.
Right. Their financials, they're losing money, need more cash. Classic pre-revenue story.
The story of many biotechs.
The market's watching them closely. A few big shareholders have a lot of influence. And the risks are real. Can't sugarcoat that.
So potential, but risky. That's the takeaway.
And that leads to our end hook. Think about this. The point-of-care diagnostics market, it's going to be huge. AI is changing the game. How can Bluejay position Symphony to take advantage of all this, maybe even disrupt the whole diagnostics world?
Yeah, that's the big question. Can they ride the wave and come out on top?
It's a good one to ponder, so if you found this deep dive helpful, insightful, all that, subscribe to the Stock Analytics AI YouTube channel. We do more deep dives like this all the time.
And remember, this was based on info from April 7th, 2025. Not financial advice. Things change fast.
The diagnostics world and the markets, they're constantly evolving.
And AI was used to create the outline for this deep dive, just so you know.
And one last thought, that What Are the 2025 Trends article, it talks about all these amazing advances in diagnostics, but what does it all mean for society? You know, how do we make sure innovation is responsible and everyone benefits?
Yeah, that's the bigger picture. It's not just about the technology itself.
It's about using it wisely. So much to think about.
Absolutely. Thanks for listening, everyone.
We'll see you on the next deep dive.
Take care.